welcome back. This is Shamil Sajjad, your friend, and you're watching the Finbus channel. This is where you come for in-depth content on business and finance. Did you know that you can also become a global investor? You can also buy the shares of tech giants like Microsoft, Alphabet, Amazon, Facebook, etc. even with your limited capital. Did you know that you can diversify your investments on a global scale even with a very limited capital? That is exactly what we are going to talk today. We are going to talk about international funds, which is definitely a game changer in the industry of mutual funds. Before we move on to the topic, I request you to subscribe to this channel if you have not subscribed. Share the content of this channel as much as possible and press the bell icon so that you get timely notifications of the videos posted. Global diversification is the highest possible level of diversification. International funds helps us to mitigate the risk associated with investments and also helps us to diversify our investments on a global scale. International funds are also a means by which the growth opportunities available in developed countries can be more equitably distributed to lesser developed countries. All of these have been made possible by the advent of international funds. International funds started operations in India in the year 2007. An international fund can be thought of as a fund which mobilizes assets and is incorporated in a particular country but makes investments somewhere else, that is in some other country. This can be done either by the appointment of an asset manager in the target country or by investing in another fund that is operating in the target country. If the international fund is investing the assets mobilized in another fund in another country, then that fund is called a fund of funds. The fund that is receiving the money is called a host fund, and the fund that is putting the money into the host fund is called a feeder fund. Another great advantage of international funds is that it's a great hedge against exchange rate risk. If you take the case of the Indian rupee, it has been losing its value against the dollar for the past many years. This has resulted in great returns on international funds for the last many years. Now let us take a detailed review of the 5 best performing international funds in India. DSP BlackRock World Gold Fund. This is a fund of funds that invests in the units of BlackRock Global Funds. This is a gold sector fund with global diversification. The top 5 holdings of this fund are Nippon Corporation USA, Barrick Gold Corporation Canada, Wheaton Precious Metals Corporation Canada, Newcrest Mining Limited Australia, and Alamos Gold Inc. Canada. The minimum investment required in this fund is 500 rupees and it has returned a very high rate of 35.1 in the financial year 2019. Franklin US Opportunities Fund. This is also a fund of funds. The top investments of the fund are in Amazon, Microsoft, MasterCard, Visa, and SBA Communications. The minimum investment required is 5,000 rupees upfront and in multiples of 1,000 rupees thereafter. The fund has returned 34.2% to investors in 2019. ICICI Prudential US Bluechip Equity Fund. The fund focuses on investment in US blue-chip companies. The top 5 holdings of the fund are Amazon, Raytheon Technologies, ServiceNow, Pfizer, and Gilead Sciences. The minimum upfront investment is 5,000 rupees and follow-on investments can be made in multiples of 1,000 rupees. But for SIPs, the minimum investment requirement is just rupees 100 and can be made in multiples of 1 rupee for daily, weekly, fortnightly, and monthly SIPs. The fund has returned 34.3% in 2019. Nippon India US Equity Opportunities Fund. The objective of the fund is to invest in the equity of US companies. The top 5 holdings are Microsoft, Amazon, Facebook, MasterCard, and IQVIA holdings. The minimum upfront investment requirement is 5,000 and in multiples of 1,000 rupees thereof. The return on investment for this fund in 2019 was at 31.8%. DSP BlackRock US Flexible Equity Fund. This is also a fund of funds. The top 5 holdings of the fund are Microsoft, Apple, Alphabet, Amazon, and Facebook. This has an upfront investment requirement of 5,000 rupees and follow-on investments can be made in multiples of 1,000. The return on investment on this fund was 27.5% in financial year 2019. Hope this video was useful to you. Thank you for your time. Thank you for sharing and subscribing this channel. Till we meet next time, it's bye from me and you take care.